Welcome back. Last lap now of the program, and of course we're tracking the markets for you. Our global stocks are set to resume, well, on a much brighter note, regaining confidence after the Brexit shock. Speaking to Rotimi Fakaijo earlier on in the program, he's also optimistic that this morning, with trade starting at the Nigerian Stock Exchange, the market will return to winning ways as investors will probably leave hugging the sidelines and come full force into the market. Profit taking yesterday dropped the all-share index down about 0.89%, and we saw the market losing about 91.01 billion naira at the end of trade yesterday. But for the bonds market, that's what we're tracking for you right now. And Omotola Abimbola, who is an investment analyst with Afrinvest, joins me now on the program as we take a look at that segment of the market. So good morning to you.
Good morning, Harriet.
It's great to have you on the show. So let's start from the Treasury bills market. Yesterday, we saw sentiments still remaining upbeat, and there was an average. We saw the average rate actually expanding. Talk to us about what actually drove sentiments in that segment of the market.
Like you mentioned, sentiment yesterday was also bullish, which was in line with what we saw 2 days ago as well. The major driver of sentiments yesterday was the liquidity inflow of about 148 billion naira for the FAC allocation to states and local governments for last month. Don't forget, the market had been in a debit liquidity of about 150 to 180 billion for some time now. But when the FAC inflow came in, debits of liquidity for banks, which is hold to the CBN via the standing lending facility window, reduced to about 50 billion naira. So that's in a way spurred the buying interest we saw in the T-bills markets yesterday. So towards the end of trading session yesterday, we saw a reversal of that sentiment to a bearish mood. That's because eventually the DMBs found out that the market was still in the debits, despite the inflow of the FAC allocation that came in.
So talk to us about the bonds market. Bearish sentiments were, however, recorded at that segment of the market. Investors taking a pretty cautionary stance in terms of trading.
Correct. Right now, the major factor affecting the fixed income markets are two. The first one is the current liquidity of the Naira money market for banks. Don't forget, last week when the CBN intervened in the sports and forwards markets for FX, they mopped up over 1 trillion naira of liquidity, and that has been affecting both banks' liquidity as well as fixed income trading sentiment. So yesterday, it was still against that backdrop that we saw the sell-offs in the bond market. But by and large, we still think that before the end of the month, when we start seeing banks trying to negotiate with their customers to bring in the naira they were debited for the FX auction, that should ease liquidity loss in the system. But then there's still an overhanging expectation in the market that the CBN might likely want to tighten monetary policy further in the medium term. So that is also a sentiment that is driving the market. But then yesterday was a sell-off, but today we still think that the market will probably pad those losses because tomorrow we are expecting an OMO inflow to the market. So that should also sort of reduce the liquidity shortage you are seeing in the system and spur more buying sentiments in the markets.
What do you expect that ahead of the Treasury bills auction by the Central Bank of Nigeria next week, on July 6th, that this OMO inflows that is also expected might kind of taper off and hedge investors' sentiments so that the bearish or the bullish expectations for the market might turn bearish?
Yeah, it's a strong possibility. Last week, when the CBN conducted a PMA auction for T-bills, we saw that the amount they eventually sold was far less than what was offered at the auction, and that was because banks were not liquid enough, and of course there were very high pricing of the instrument that were on offer. So they took a preemptive approach by trying to reduce the amount that would be eventually allotted to those that subscribe. But going into next week now, we think that, of course, having tested the result of the CBN to go higher, to increase the stop rate at the PMA and not succeeded, banks will be more willing to actually offer very attractive and acceptable rates at the PMA auction that will be conducted next week. So then we expect that the subscription rate will be very much higher, and the amounts that will be allotted will be a lot higher than what we saw last week.
Well, Omotola, it's less than 48 hours to the end of the month of June. How do you think investors will trade today at the bonds and the Treasury bills market?
Well, today we expect the market to, of course, for the T-bills market, the bullish sentiments may likely continue as well. Like I mentioned, there is an OMO inflow anticipated tomorrow. And if you had the inflow we saw from FAC yesterday, day by day, the liquidity shortage we are seeing in the system is being reduced. So that may likely ensure that the market continues to trade bullish. For the bonds market as well, investors may likely take a breather because if you look at the yield curve now, there is a slight inversion from the mid tenor of the sovereign yield curve. So we may see some investors trying to take position at this particular mid section of the yield curve, and that may likely lead to a moderation in the average yield for the bond markets.
Well, thank you so much, Omotola, for joining me on the program, of course, and sharing your perspectives with us.
My pleasure, Harriet.
Omotola Abimbola is an investment analyst with Afrinvest, giving us his perspectives there on bills and the Nigerian Treasury bills and, of course, FGN bonds, expecting OMO inflows into the market, and that should provide more liquidity for the market, and so we might see rates actually increasing. But just so you know, global markets are actually regaining confidence after the Brexit shock. You can follow the story with us on Twitter. I am at CTV Harriet, at Bibosin, at Biz Morning, and at Channels Television. You can also join us much later, 1:30 p.m. on Business Incorporated, as we track this particular development for you. Now, the first Naira-settled OTC FX futures trades has been executed between the Central Bank of Nigeria and Citibank Nigeria Limited on FMDQ OTC Securities Exchange. The trades were executed on behalf of foreign portfolio investors. Now, of course, this comes with the launch of the Naira-settled OTC FX futures market, which has been greeted with a lot of optimism in the industry. So a lot of stories are going to be coming out. We're watching this particular story for you, which is a developing story. So keep track of it with us on all our social media handles. I'm Harriet Agbenyi. Have a profitable day.